welcome back. You're watching Stockwatch with me, Juliette Televi, and joining me to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from F&B Wealth and Investments. If you'd like to send questions, please email stockwatch@bdtv.co.za or via SMS on 41392. David, Wayne, good evening to you both. Today is one of those days you look at the all share and you think, not too bad, down about 0.1%, and then you look at the rest of the market and you think, oh, I'm very glad we don't have a preponderance of big tech and luxury stocks. So David, I'm going to start with you because before we went on air, you said it's like the trapdoor falling, and I suppose it's like when you have that gut feeling like it's dropped out of your body. Is that how you feel about today?
Yeah, there's nothing like a good panic. We love it. I think people actually enjoy it, because it gives them something to get all excited about and that. But Juliet, it was bound to happen. It was working up to it after the kind of gains that we saw in the first half of the year. There's always the need or the want to take profits, and you will find an excuse to take the profit. So we had it in April. We had a mini burst like this. In fact, I still think probably April was worse than we're seeing at the moment, but it'll work its way through. If you actually look at the numbers that are coming through, there's nothing bad about them. It's just that people want them to be bad and will dig for something that will trigger the sell-off.
Wayne, do you think everything just ran ahead of itself and this is a healthy correction and you shouldn't panic if you are a holder of, I don't know, a Tesla or Alphabet or LVMH, which also had a pretty horrible day?
Look, we've spoken about this often. Let's put Tesla aside because there could be other things happening on Tesla. In other words, the move to electric is not anything like it was hyped up to be.
Yeah.
So there might be a structural issues. All the others, the only problem is the share price. And the companies are doing extremely well. So there's limited downside to these shares, but that might be 20%. But then, should we get that? And sometimes it's healthy to get that. You must fill up your socks then. But clearly the market's got a bit of a scare here today. Maybe it started off with the Tesla results coming out because Tesla's down 10-11%, but everything's down. Look, the worst thing you can do is panic. We've spoken about this so many times. If you make an absolute fortune in a company and it's just gone, stratospheric, it's never a bad idea to take some profits because you're still exposed to it and you're putting something in the bank. Literally 2 weeks ago, a week ago, the Nvidia share capital was bigger than the French share market.
Yeah.
The market. It was virtually on par with the UK market capitalization.
Yeah.
So I think some weakness is quite justified.
Yeah. And just a very quick question before I get to questions, because there are quite a few of those. On the luxury goods sector, do you think what a lot of people did was make the mistake of inferring a future based on an event? In other words, COVID, everything was shut down. There was disposable income because you weren't traveling, or you would spend it on luxury goods at home, or you would spend it on luxury goods because you didn't have other options for your cash. And a lot of people inferred that this is the new normal for luxury goods companies, and therefore we see profits and revenues riding accordingly. It's kind of like the platinum guys in the sort of before the platinum bubble burst in the early 2000s, making assumptions on mines based on the platinum price of $2,000 an ounce. And then, of course, the bottom fell out of the market. Do you think there is an element of that in some of the assumptions about luxury goods companies?
I think
luxury goods are not commodity shares.
I think it's China. If you break down the number, China has fallen. I think in LVMH's case, they were down 14%, which is a massive amount, whereas every other segment of the market was steady or improving. So, where you get, I think China's turning out to be the big disappointment. The economy is struggling. So once you take that factor out, that's where they're missing. They're missing from on the Chinese side. And we might just have to adjust to it. Chinese tourists, whichever way you looked at.
Yeah.
So I think that has been not the catalyst, that's been the main area. And they think it'll come back. I don't think there's anything wrong with luxury, and those not exposed to a large extent to China are doing better. I just looked at Kering's results. They beat forecasts now. I know they've been under pressure. There's been a lot of problem with the Gucci brand, but you started to see a pickup from from where they were. So I wouldn't get too worried about the luxury market. I think China will come back or at least stabilize.
Okay, on to questions. One of the shares that took a pounding today was Brait because of a rights offer, and the panel, the viewer asks, will the panel take up their Brait rights? And then he says, I also have BIHLEB, Brait Investment Holdings Limited EB. Obviously, that's the code from a previous rights or something. How does that work? Is it connected to the price of Brait? Can anyone enlighten? Okay, firstly, would you take up your Brait rights if you were a holder? Wayne?
To be honest, I don't know. I mean, clearly Brait has been a massive disappointment. I mean, I think the share price was down from, 150 or something, man.
Yeah, it was about 140 when it traded at a premium to NAV.
To NAV, yeah. I actually don't know the answer to that. I know you're going to get diluted. I know it's being unbundled. Yeah, I don't know the answer. Maybe David can shed more light on it.
To be honest, I've just stayed away from this. I really don't. I know that Christa Visso's come back and getting involved and they're raising money, but there's nothing there that that really gets me going. From New Look to what's a New Look? Yeah.
New Look was the problem.
Virgin Active or to any of those. Yeah, they've got rid of Premier, so I don't know what the big attraction is.
Yeah.
I just on that, I just looked up BIHLEB.
Yeah.
Yeah, it's actually listed, and it was 800 Rand a share. It's got a market cap of 2,390,000,000 or nearly 2.4 billion, but there's no trade. So I don't know what it is. Whether it's an instrument or not, I'm not quite sure.
Okay.
But I just put the code in and it actually came up as being something that's listed. So there's no dividend yield, there's no earnings yield, there's no PE, there's nothing more than a share price that exists. I don't think it's ever traded. I don't know. Previous close 800 Rand, which I don't know when. So there is something there.
Okay. And because every viewer gets a chance basically to say something, I'm going to mention somebody's rant. And she says, what on earth is happening to Brait? The board should be fired for their shocking decisions. I suppose they're still taking their fat salaries. Why haven't they been voted out? And let's get to the Telkom board. Reject a 65 Rand buyout from MTN with all the arrogance of fat cats earning huge amounts for taking Telkom into the rubbish dump. Why don't shareholders get rid of boards that are sitting on their bums for years and years and never held to account? Sorry for the rant. I'm just sick of looking at my shares joining the rubbish dump. Yes. So that was a viewer.
Yeah. What's her name? You've got to give us her name.
Look, it's always
no,
good.
I can't do that.
Good.
Discretion is a better part of valor here. But Wayne, I mean,
and they are right. They are right.
Totally. I think we can give her a longer list if she wants. I can start, as I say every time, we can start at A and end at Z. There are many businesses whose egos have CEOs whose egos have stood in their way and have just wasted shareholders' money. It's go right.
The biggest disasters have been driven by excess egos from the management and sometimes the majority shareholder as well. You can run through virtually every single catastrophe in our share market, and it comes down to that in 90% of the cases.
Yeah, I mean, it does beg of one as a investor to be more participative at AGMs. I know it's really hard and it's very intimidating at AGMs, but you attend the AGM if you're a shareholder, and that is the opportunity for you to speak your mind. And try not be intimidated, and I say that because they are very intimidating affairs. But that's
you must go to the AGMs where they give you a cup of tea and a biscuit, and they're very nice to you. And after you get a rant and rave, and they say, yes, we've noted that, we'll come back to you, and they never come back to you.
Yeah, no, it's actually yes, maybe don't go to the AGM, but well. Yeah,
It
I
should
agree.
be. That's why it was designed. That's why you have an AGM, that you can actually air your views and ask questions, and they should come back to you. And in many cases, I don't think they covered. By covered, I mean the press don't cover him, and you don't get the chance to really get hold of management. I think they're very good at deflecting questions.
Yeah.
But honestly, there's there's so many businesses that have misused shareholders' capital for their own enrichment or ego. Yeah.
Yeah. Okay, and talking about options and taking them up, a viewer says, hi again. This is, let's hope this is the last time I trouble you folks with my stupid query. There is no such thing as a stupid query. He says, I only have a certificate of 97 shares sent to me in 2016. He's talking about pick and pay shares. The option, I suppose the rights offer, is open to those with every 100 shares. I don't have a broker. What is open for me to do?
No, it's a ratio per 100 shares.
Okay.
It's 1.11, but there's certainly something for anybody who has an odd lot.
There's odd lot offers all the time. I don't know the details, but there's always an odd lot offer.
If you don't have a broker, what do you do?
Get hold of the transfer secretary.
Yeah, just contact Pick and Pay company secretary.
Okay. Okay.
But you can't just ignore them.
Yeah.
So, certainly if that person gets dividends, I mean, I don't know when the last Pick and Pay dividend was, but I mean, they're still very much part of the company and can't just be in that sense.
Yeah. Okay. All right. And then maybe a quick question before the break. Is it possible to get exposure to the Russell 2000, the US small caps, through a local ETF like Sactrix or Signia?
I really don't know. I haven't seen one. But I mean, just on that, lots of people are pumping US small to medium caps. It's been a lot of noise around them.
Yeah, what they're doing is that they're not actually buying the underlying shares, they're just buying the index itself and buying options on the index, which is the easiest way to trade it. But I think the Russell 2000, the total market cap is less than Apple, to give you an idea how small those businesses are. So I think at the moment it's a trade. By trade, it's not being translated into buying actually underlying businesses there. It's much more, sell the Nasdaq,
buy the
Russell 2000.
Yeah. Okay. I mean, I've never seen the Russell 2000, but it could be that I just haven't looked hard enough through the local ETF providers.
There are 2,000 grocers from Tennessee in that index, and lots of small little businesses.
It's not exactly mom and pop shopville, okay?
No, they're decent little businesses, but I mean, it's basically the small cap, and over time, it's never really challenged the large indices and that. If you go and monitor it.
I'm going to bombard you with a whole bunch of questions on the JSE's own smaller cap companies, which viewers have sent us this evening. So I shall start with Nampak. And the viewer says the gain in the share price has been well received given the last update, with the share up more than 100% in the last couple of weeks. Has the fairy tale now been fully priced in, and the market will most likely be disappointed with the next set of results? Or what are the prospects for the company, do you think? Wayne?
Look, it's turning up off an incredibly low base. But, if the business is turned around, and I read the last set of results quite extensively. I went through it quite thoroughly. And I still think there's more to come, but this is still dangerous territory.
Yeah.
I mean, a company that's gone through this turmoil. I mean, David and I remember when Nampak was a blue chip in the 90s.
Yeah. Sure, that is an astounding rally. My goodness. That's one passed me by entirely.
Well,
but as I said, off a low base there.
Yeah.
And they raised money.
And they had a share consolidation and the whole lot.
Yeah.
I think
there's more to come, to be honest.
Yeah. But I think just give it time. Let it consolidate, let it build up a little bit of muscle, and then you can have a look at it. I think there's always this desire to get rich fast off these companies that have been bombed out. And they bombed out for a reason, and you might strike one or two of them and that, but it's very difficult to turn a company around, as we've seen with Pick and Pay. You
Look,
talk to Sean Summers.
I mean, if my memory serves me correctly, we spoke about Nampak a while back, and we said it's option money. You can either double your money or lose it all. And this one, you doubled your money.
Yeah, I know. So if you were if you have doubled your money and it was an option, I mean, sure, wouldn't now be a good time to cash in and say, right,
certainly take some of the profits.
Yeah. Okay, speaking of another small cap company, Renagen. As the viewer says, as a sad holder, I'm asking what it would be, a rising phoenix or a dying dodo?
At the moment, it looks like it's under a lot of pressure. It just seems to be creeping down, and we haven't heard from Steph for some time. So I really don't know what the state of the business is in, and whether this is ever going to make it. But I think the market, the market positioning at the moment is quite worrying. I'm just looking at the day-to-day trade, which doesn't seem to be anywhere near the kind of positive views we had a couple of years ago.
Yeah.
And Steph's also gone missing in action, hiding somewhere in Tulsa or in Los Angeles. Where is it? In Las Vegas or wherever he is? I don't know, Texas. So, yeah.
But look, Julieta, you could talk about this as well. There has been a few disappointments down the road on this share.
Yeah.
I mean, and I copped a lot of flack from a couple of people saying I did interviews with Stefano Marani and I didn't disclose that it was a holder. I had forgotten, to be honest, I hadn't disclosed that I was a holder, but I bought in high and I sold low. So if, I felt the pain equally with other people. And I don't think I was trying to do anything to goose up the share.
But look, you got to understand the nature of companies like this. It's essentially an exploration company.
Yeah,
I think
exploration companies are risky. These exploration companies
that's why I say
seriously risky.
Wayne, if you go to the Virginia, if you go down to Virginia where the plant is and that, there's the remnants of a lot of companies, that used to be listed. And it's a reminder of how difficult mining is. And look, he had a nice story to tell. When you looked, you knew that he needed a lot of capital, he needed support, and he's in a difficult area. He's in helium and gas. It's not the easiest to
extract,
to mine, or I don't know, extract is a better word. Yeah, he tried.
Well, I mean, we sound like we're writing it off, but maybe once again, this is also an option.
It's option, yeah. I think all exploration companies is option money.
Okay. Yeah. Then a viewer says, he says another company which is like Brait, in my view, is Cap Industrial. The share is going nowhere. They've had a few issues. There were expectations. Cap, owns Unitrans, PG Bison, Safran Coal.
Cap.
I mean, they have decent assets. Well, Cap. But have had a few. They've had a tough operating environment, and there were a few things that went against them. Would you write this one off, or would you be prepared to back it?
I don't think you can write this one off, to be honest. I mean, it is a proper company, despite where it comes from. It's a proper company. It's got lots of industrial assets. It needs an economy to pick up. It's an 8. It's a 7-8 PE share that's cheap. I wouldn't. This is not a Renagen or a Brait.
No, they're well-established businesses. I think we forget that the economy there is no economy, especially in those kind of manufacturing areas.
Yeah.
We're all waiting.
They make particle board used building.
Yeah.
So look, it's 8 billion market cap.
And actually, the share has. I thought maybe.
But I mean, it's
share has recovered a little bit. So
yes.
It's not completely on its knees.
No, don't. This is not in the same classification as Brait. So I don't write this one off. It just needs a half decent economy to get going, and
Okay. And then a much bigger company, ASML. The viewer says, as to your intro of the show, both got smacked from the 16th of July, but are they still worth a hold for the long term? I'm imagining that both of you would say yes. ASM and ASML.
Yeah.
ADM, sorry.
Yeah,
Sorry.
but this is not over. And I mean, it's if you went through the numbers, it's still an incredible company, and it's still absolutely imperative for the making of chips. You know, you've got that supply chain which starts at ASML, which goes down to TSM, which is Taiwan Semiconductor. You know, they make all the wafers and chips for NVIDIA, and on the side you've got other businesses that kind of connect the chips and everything. So there's a massive supply chain around it, which is still working. You know, so
the viewer, I have to say, the viewer, maybe we're both slightly dyslexic this evening, talked about ADM, which is a company. I think he was referring to AMD, which is Advanced Micro Devices, but there is a company listed with the share code ADM, which is all very confusing for all of us, but yes. Which is what we just had.
Advanced Micro, it's a good business. I think, you know, it's trying to compete with NVIDIA. It's going to take a bit of time. It's a little bit behind, but they'll get their act right. And I think also, if you look, I'm not a chip expert, but you get the learning chips and you get the memory chips, you know, or the processing chips. And I think this is one of the processing chips. So, but it's a good business, and you know, I still think there's a lot of life in those businesses. So don't be depressed.
Yeah, perhaps maybe just Wayne, your thoughts, and maybe we can bring up a 5-year chart of either ASML or AMD, just to give a bit of perspective on a day like this, when it feels like the sky is falling on your head.
Look. I mean, when you consider where these share prices have come from, today is absolutely nothing. But I mean, you have to realize that the shares are massively expensive, but the underlying companies are good. You know, this is not the dot-com bubble. And I think, you know, it's hard to ride out the downside, but, you know, these shares aren't going to fall by 60%. You know, maybe we get, as I said earlier, maybe you get 10, 15, 20% fall, if that, in the share prices, but then you should be a strong buyer again. And once again, it teaches everyone, you know, don't be too greedy. If you bought a share and it's doubled and doubled again and you feeling like really wealthy, take some money off the table. Don't be too greedy.
Yeah. Okay. Our fast-acting technical crew pulled up a really nice chart there of ASML, so over 5 years, and it does show you exactly what we're talking about here. So I shall get to your stock picks this evening. David, what in this rather febrile market, what takes your fancy?
Look, I'm not saying I'm a big Alphabet fan, and I'm saying don't buy it now. You know, not today. But a company that makes whose net income for a quarter was 23 billion, and it was up like over 30%, and I think the earnings up 30%. That's not a shabby company. You know, why the market responded is that they put a lot of money into AI, and they didn't get an immediate return. Well, it takes time, you know, but this is still a massively rich company. Just to translate that, the amount of net income that they made in the quarter is as big as the market cap of Standard Bank, you know, so that's one quarter. So I think don't write these businesses off, but this is not the time to buy in this kind of climate. Just let the market run its course.
Okay. Wayne, how about you?
I'm going for Coca-Cola. I mean, they came out with results that were very good. The rating of the company is not that excessive. And as we were discussing earlier on, I think now might be a bit of a swing happening, and this should last a while, back to consumer staples, maybe a little bit out of the Magnificent Seven and tech. Because in a falling interest rate environment, these are the areas that actually should do quite well. And, you know, as I said, their results were not bad at all.
Yeah. I mean, the shares actually had a hell of a year. So, yeah. All righty. Well, we shall leave it. David, Wayne, thank you very much for joining us this evening. Nice to chat to you, as always. David Shapiro is from Sasfin Securities. Wayne McCurrie is from F&B Wealth and Investments. And up next, we have The Close. Stay with us.